Welcome to Looking at the Markets with David Modell. I wanted to look at whether holding onto gold or silver is a good way to protect yourself against a stock market crash. So let's look at a website called macrotrends.net. Wanted to give them credit. And we're going to look at how gold and silver, first we're going to look at gold and how it performed during several economic recessions, which would also be market crashes, stock market crashes. So the gray part here is a recession, and as we can see, this is the early 1990s recession, and this is the gold price, and it pretty much ended where it started during that recession. So it held steady, it went up, but then frustratingly came back down, but at least it didn't lose money. So it performed pretty well there. Let's take a look at the next recession after that, which would be the early 2000s. And as we can see, gold went up during that. It went up during the recession of the early 2000s. So that's pretty good. I would say it was a pretty good hedge, pretty good protection against that market crash there. How about the most recent recession in the during the late 2000s? Well, here the picture is not as clear. It's pretty choppy here. Up, down, up, and it did go up. It ended somewhat higher than it started, but it was probably not so easy to just ride out this downturn here, this pullback. I mean, we know historically, in hindsight, that it came right back up, but people didn't know it at the time. It probably felt like it was going to keep going down. All right, so let's take a look also at silver prices. And this is macrotrends.net. Here we go. Silver prices, 100-year historical chart. We're going to let that load up, and we're going to look at the same three market crashes or recessions. And we'll see how silver did during that time. We're going to make it not inflation adjusted, and we're going to start again with the recession from, we'll start with the early 1990s, and we'll study that period. Let's see how it did. There we go. Well, let's look at silver during that early 1990s recession. We can see silver prices going down sharply. Not such a great hedge, not great protection against a market crash there, or a recession. Let's look at the dot-com bust of the early 2000s. Let's see how it performed then, and we can already see that it was quite choppy. Look at that. Up, down, not so easy to ride that out. And it looks like it may have actually ended lower than it started, a little bit, somewhat, but not so steady. It might not have been very easy emotionally to ride out this up and down, the chops here. Perhaps not such a perfect hedge right there against a stock market crash. And then finally we're going to look at the Great Recession, the late 2000s here, and hey, this is silver and not such a perfect market hedge, although it did end just about where it started. So if you had held on, but it's not so easy to hold on to such a precipitous drop from almost $20 an ounce to less than half of that, about $9 per ounce. It's easy in hindsight to say, oh well, I would have just held on and it would have been fine, but when it's falling so sharply, so fast, that's not such a great market hedge. It's not so simple just to ride that out. A lot of people would panic or lose patience and sell for a pretty sizable loss there. So looking it over, it looks like gold, at least for the past three recessions, gold seems to have been a better hedge or protection against a market crash than silver perhaps. And I'm not telling you what to buy or what to do, what not to do, but gold does seem a little better, at least historically, for the past 3 recessions. But neither one was a perfect market hedge. They were both choppy, they both had their ups and downs, and it's not so easy to ride out those downs, especially when it takes months or years to work itself out, and especially when it goes down a lot. So if you're buying gold or silver with the only purpose being to ride out a potential stock market crash or recession, it's not a perfect hedge. You may want to consider other hedging mechanisms, hedging strategies, such as holding cash or using put options, or using small position sizes with your trades. Things like that. There are things you can do besides stacking a lot of, holding on to a lot of gold or silver, and there's nothing wrong with that, but don't expect it to be a perfect market hedge. There may be better ways that you may want to consider. Alright, so if this was helpful to you, then please give this YouTube video a thumbs up and comments. I like to read your comments. And please subscribe to my YouTube channel so you can receive the latest updates on my financial educational videos. And if you'd like some help, if you have questions or you'd like some help putting together a trading or investing plan, you can contact me at any time. My email address is davidmodell@gmail.com. Thank you so much for watching and listening. I really appreciate it, and I'll talk to you again soon.